Today's episode is about making sense of 2025, not just what happened, but why it happened, and then looking forward into 2026, where the risks, opportunities, and big unknowns are starting to stack up. Even though rates were still high compared to the COVID era, confidence definitely shifted, and borrowers stopped asking themselves how much higher could rates go, and they started asking how much lower might they go next. When detached houses become harder to afford, buyers don't disappear, they adapt. What has 2025 taught us about what to expect for 2026? If it's taught us anything, it's that Perth property isn't driven by hype, it's driven by fundamentals.
Welcome to Perth Property Insider, where you will learn how to grow your wealth and improve your life using Perth property. Our show is brought to you by Investors Edge Real Estate, the highly rated and award-winning property management, sales and buyers agency servicing the whole of Perth. Now, here's your host, Jared Mann.
G'day and welcome to Perth Property Insider, our first episode for 2026. And I thought I'd start the year by reflecting back on the year that was 2025 and looking forward to the future as to what might come next in 2026. So if you're a Perth property owner, investor, or first home buyer, 2025 was another year that probably felt unreal. Prices rose again, rents stayed tight, interest rates finally came down, governments threw more incentives at buyers, and Perth once again outperformed most of the country. So today's episode is about making sense of 2025, not just what happened, but why it happened, and then looking forward into 2026, where the risks, opportunities, and big unknowns are starting to stack up. So in today's episode, we'll cover the major state and federal events that shaped Perth property in 2025, exactly what happened to prices and rents across houses, units, and land, whether the banks and SQM, which is one of the major research prediction houses, actually got their predictions right. And finally, a grounded scenario-based outlook for 2026, including some of the things that are going to shape the property market and finance space next year. So let's start with the backdrop, because property doesn't move in a vacuum. And there was some really big events that shaped Perth property in 2025. We had the state and federal elections. We'd probably tried to move on and forget about them from now, but they really did have a big effect on our market. So 2025 was the double election year. And that matters more than people think, because in March of 2025, the WA Labor government was returned for a third term under Roger Cook. And at a federal level, the Australians went to the polls in May 2025, and we had Labor elected there as well. So now elections don't usually crash markets, but they do pause activity. So we saw buyers hesitating, vendors waiting, developers delaying decisions, and there was lots of warnings that early 2025 activity could soften temporarily because of the election uncertainty, and it certainly did. So what happened in Perth was a brief hesitation where there was a real pause, a taking a breath, followed by the pent-up demand that occurred over that period coming back on fast, especially once policy settings became clearer, both at the state and federal level, and everyone was confident again they were going to be positive for property and for people making decisions and purchasing. So what did we then have? We had the interest rates start to change, and it really produced a big psychological shift. So this was probably the biggest psychological change to buyers and sellers in 2025. After a brutal tightening cycle in previous years, the RBA finally cut rates in February of 2025, taking the cash rate down to 4.1%. Then further cuts followed, and by August 2025, the cash rate was sitting at 3.6%, where it ended the year. Now, here's the important part. Even though rates were still high compared to the COVID era, confidence definitely shifted, and borrowers stopped asking themselves how much higher could rates go, and they started asking how much lower might they go next. So that change alone really improved borrowing capacity, albeit by not that much, But what it really did do was it lifted buyer confidence that they're not going to be put into a position where they can't afford their mortgages. If they could afford it now, and then they were expecting things to get better. And that gave a lot of people that were sitting on the sidelines confidence to take the plunge and start looking to become a home buyer or an investor in many cases too. So the next big thing we had was the first home buyer policy changes. And this really pulled forward demand. You picture all these, first home buyers living at home or renting, thinking about getting their own first home, and they were going to do it at some point over the next 1, 2, 3 plus years, maybe even longer. These incentives basically brought forward that demand and helped them do it sooner. So the federal incentives really kicked in from the 1st of October, and that's when we've seen a massive increase to activity and a real feverish bidding and competition up to 850K, which is the cutoff level in Perth here. So that was the federal government expanding their home guarantee scheme, giving unlimited places and higher property price caps, and there wasn't any incomes or means testing as to qualifying for this home guarantee scheme. So certainly poured petrol on an already hot Perth market. And then we've got in December, Help to Buy shared equity scheme that's officially launched recently. So that's where the government actually partners with you. You have a shared sort of equity position because you might own a lesser percent. You're only responsible for the lesser portion of home loan interest rather. And so it just helps people get into better quality houses and afford to be able to pay the loan still. So that's only going to add to the demand in this first home buyer space. Together, these incentives reduced deposit hurdles. There was no lender's mortgage insurance payable, and it really removed those upfront barriers to entry. And then when we couple that with the WA government, they made some changes to Keystart, and you did have to. There's a cap on the annual incomes that you can have to qualify for a Keystart loan. So it only really applies to those that are on lower incomes, but they raised their price caps as well and basically gave home buyers access to higher purchase limits, more lower deposit pathways. So they've got a 98% lend, so they only have to come up with 2%. And they expanded the eligibility of people that would qualify. So put simply, 2025 made it easier to buy than it had been in years for these first home buyers. Even as prices were rising, it still became easier for them. So that combination pulled the future demand forward, especially at the lower end and mid-price points. And we'll come to why that matters for 2026 a little bit later on in this episode. Now, let's take a bit of a look at the scoreboard. What happened to prices, rents, and land across 2025? Let's get into the numbers because this is where the story gets real. So house prices in Perth Metro, depends which source you look at, but at the end of 2024, Perth's median house price was roughly $740,000, and by late 2025, it had risen to about $835,000. So that's around a 13% growth in 1 year. Strong, but not quite as explosive as earlier cycles. And keep in mind, this is at the median level. So there's definitely suburbs that have outperformed this, and we try to buy into those areas that are most likely to outperform, not just in a single year as well, but have more sustained growth over the medium and long term. So it's always worth looking at, how you can get a good first year growth to be able to recycle out your deposit. So 13% to the median house price. Unit prices, these were quite the overachievers. So units were the standout, and the median unit price rose roughly from $475 to about $585, which was a 23% growth in a single year. So this tells us something important. When detached houses become harder to afford, buyers don't disappear, they adapt. So they've chosen units, and when they couldn't get into houses, they're accepting townhouses, they're going for higher density, or they're compromising on the size of the house or the size of the land. So 2025 was textbook example of this behavior where they didn't disappear, but they adapted. Now, let's take a look at rents. They were still very tight across 2025, still rising, and the rental growth did slow compared to earlier years, but it didn't stop. So the median house rent rose from 650 to 700, about an 8% increase. The median unit rent rose from 620 to 670, about an 8% increase. And vacancy rates remained extremely low by historical standards across Perth. So we did have a bit of a blip there where in some suburbs there was a lot more investors buying in than others, and rents have begun to soften, and we're still seeing that now. But across the board, vacancy rates have remained tight. So you really need to look at suburb by suburb when you're buying and when your property's coming up for lease again. So this has kept investor yields strong across the board, holding costs manageable because those yields have stayed up there, and competition fierce for tenants. And it's ultimately slowed the overall number of people that are transacting in the sale market, because previously you could go and rent a property. Well, it's been quite some time since you could do this, but in rental markets that have got more supply, you can go and rent a property in between selling your home and buying the next one. And that gives you a place to change over while you look for that next property. Because in the market at the moment, it's too difficult to be subject to sale. You really need to get your finance in order and see if you can have a bridging loan so that you could buy a place, make it not subject to the sale of your place, and then sell your place to move over. And at the moment, it's very difficult to move into a rental if you don't have that bridging finance. So the impacts are beyond just what's happening in the rental market. They impact the sale market. So in essence, they're still remained attractive to investors because the yields have still kept increasing, and that's kept holding costs more manageable, especially on the backdrop of interest rates decreasing. It's also, with rents continuing to go up, it's continued to incentivize tenants to try to become a homeowner and get out of renting. So what has then happened on land? Well, the supply constraint has never actually gone away yet. Perth's median land price sat at around $389 in late 2025. And while there was some relief and some land supply opened up in fringe areas, the reality is that service land remains very scarce. Construction costs remain elevated, and delays continue to impact some builders. So land has never become cheap again. And that matters for future supply because there's still not enough in the pipeline to meet the growing demand from population increases, and also bringing all of these first home buyers into the market.
Just real quick before we continue on with the episode, are you getting my email updates yet? If you're not, you're missing out on our suburb intelligence reports, which we tailor and prepare for your individual suburbs of interest, showing advanced stats and insights. Must get onto those. And I also send out exclusive invitations to our events, including webinars, sundowners, and workshops. So if you're not getting those, head on over to investorsedge.com.au/join and make sure you're receiving my email updates.
So now let's go into, did the forecasters get it right? Well, SQM Research, which is one of the bigger researchers houses, they publish a report each year. They've just published it for 2026. But for 2025, they were predicting under their sort of base case scenario, I believe, for prices to rise between 14 and 19%. And houses came in slightly below that range. So I mentioned that they'd had 13%, and units exceeded it comfortably with 23%. So the call was certainly directionally correct, but the composition has mattered, and we've definitely seen it move towards the more affordable price points and into units more strongly than houses. So if you owned a unit or a townhouse, 2025 was exceptional for you. Now, what did the banks sort of come out with? And most major banks forecast national price growth to be around 6%. So Perth has outperformed the national narrative, and there was varying predictions for Perth, and I tend to take them with a real grain of salt. So Perth runs on its own cycle, and it's driven much more by supply, migration, and affordability than it ever is based on East Coast sentiment. So just worth taking anything that the banks say with a grain of salt. Now, let's go into looking ahead to 2026 and what are the different sort of forecasts floating around. There's one prediction. Rather than just one prediction, let's talk about three different scenarios and how things could play out. So the first scenario is the still strong case, where SQM is predicting 12 to 16% growth for Perth in 2026. Supply remaining tight, population growth stays strong, and rates remain stable or drift lower. This is really going to be a continuation of the cycle, but just less explosive. So that's the first scenario. I think that's the most likely scenario, the still strong case. Now, scenario 2 would be the moderation case, where we've got websites like Domain and Westpac predicting somewhere between a 5 to 8% growth, so not as strong as the still strong case. And in this scenario, price growth would continue, but affordability is going to start to cap upside as to how much growth can happen, and momentum will become patchy by suburb and product type. So I think it's really going to depend how much affordability starts to bite as to whether that's going to slow us down in 2026 or whether that would be more of a 2027 case. And then scenario 3 would be the cooling case. And this is the risk scenario, not a crash, but more of a slowdown. And it's likely to be driven by policy, not by panic. So I'll go into some of the risk factors that would translate through to this third scenario in a moment. So what are these big risks and pressure points for 2026? If you've tuned into my Perth property market update, and I do suggest you check it out, my last one for December, where I did a really big deep dive into factors affecting demand and some of the policy changes. But APRA has brought out lending caps for the banks. It does seem to be flying under the radar still a fair bit, but from the 1st of February 2026, APRA is introducing a debt-to-income limit. So banks can now write only 20% of new loans at a debt-to-income limit of 6 or higher. So they're going to apply this separately for owner-occupiers and investors, and it's not going to go and ban borrowing at higher debt-to-income ratios, but it is going to ration credit. And who does this hit the hardest? Well, highly leveraged first home buyers, upgrade buyers that are really stretching and pushing it, and the investors that are stretching serviceability and pushing it too. So it's likely to slow down demand at the margin and increase buyer scrutiny because they won't be able to go as high, and reduce some of that emotional overbidding probably. So let's go into one of the other risks or factors on the horizon that could lead to this cooling case third scenario that I mentioned. There's an interest rate rise risk, and it's looking like more so that cuts are finished now, and it could be one of the shortest interest rate cut cycles that we've ever had. The cash rates ended 2025 at 3.6%, and some banks are already warning if inflation reaccelerates, as we've started to see, rate hikes could return in 2026. So even the possibility of hikes dampened buyer urgency, they start to change sentiment, and it increases lender conservatism. So even the risk of it happening sees the banks, starting to be more scrutinistic, and they start to increase their fixed rates to protect against their downside. So watch this space with regard to inflation and what the RBA then looks to do. And hopefully there'll be a little softening with these debt to income caps that'll mean that we don't then need to use the big lever of interest rates to increase interest rates and pull that lever and dampen growth and overall demand by even more than what the small change I think the debt to income caps would do. So the other final risk and question on the tip of my tongue, and it might be on yours too, is when does first home buyer demand start to fade? And here's the timeline that matters. So in October 2025, federal incentives expanded with the first home buyer low deposit scheme. And then in February 2026, APRA's lending caps are starting to begin. So I think this is going to suggest that late 2025 and early 2026 may see front-loaded demand and could end up being one of our peak periods before these APRA lending caps begin and start to soften things a little bit. So you'd imagine that in the first few months as well, of once those first home buyer incentives apply, there's a rush, starts to taper off, and combine that with these debt to income caps changing the behavior of some of the buyers, maybe some of them sitting on the sidelines, but others moving into more affordable purchase options, such as higher density, sort of suggests that could be another very good year for units, townhouses, villas. So it just depends how much these constraints start to bite and how many buyers have been really brought forward and how much demand is there to run its course. But I suspect that it's going to hit hardest at the lower end of the market, and the second win that we've had in that lower end will start to taper off. I think the middle will be more resilient and the middle will start to upgrade into the upper end as we see out 2026. So affordability, have we hit that ceiling? This is the $1 million question. And as prices rise, some buyers drop out, others compromise. Many lean on the bank of mum and dad, which I'm seeing all over the place at the moment at home opens, parents coming through and helping their children make that purchase with either being a guarantor, so not having to tip in money, or matching some of their deposit dollar for dollar, or using some of their equity that they've got to help them get into a better property that they're going to stay in longer. So what we saw in 2025 suggests that buyers don't vanish, they just adjust. And I think there'll be, like I said, more units, more townhouses, smaller blocks, different suburbs. Affordability doesn't stop demand, it just reshapes it. So in conclusion, what has 2025 taught us about what to expect for 2026? If it's taught us anything, it's that Perth property isn't driven by hype, it's driven by fundamentals. We've got incredibly tight supply still. We've got strong population growth still. We've got policy support that arguably we didn't need the extra demand. And now we've got some credit constraints that are going to replace interest rate fear. And we'll have to see by how much that's going to affect things. So 2026 is unlikely to be a boom everywhere or a bust anywhere, but instead it's shaping up to be a much more selective market where strategy matters even more, and suburb selection and property selection is going to be key. So that's why I think we can add a huge amount of value with our buyer's agency and our trifecta method for selecting a suburb area and property that's most likely to outperform. And I think you need to be incredibly more selective as we near out the end of our cycle over the next 1 to 2 years. So if you're buying, investing, or planning your next move, the question isn't, will Perth grow? It definitely will. It's where, what, and under what lending conditions. And that's exactly what we'll keep breaking down on this podcast. So thanks for tuning in. If you've enjoyed it, I always appreciate a review or a rating on Spotify and iTunes, and would really love it if you share it with your family and friends. Give us a like if you're on YouTube. Post a comment if you've got any. I love answering any questions or hearing what your thoughts are. So thanks for tuning in, and really looking forward to a big 2026 in the year ahead. I'd encourage you to have a bit of a reflection on how 2025 has gone for you and your portfolio. What are some of your goals for this year? I love setting goals and getting real clarity. If you don't yet have a strategic portfolio plan, now would be an ideal time to get some clarity and set your goals. And that's something we can help with if you get in touch. And I'm really enjoying helping our clients do that at the moment. So thanks for tuning in, and catch you on the next one.
Just a reminder, the information discussed in this podcast is general in nature. As we don't know your specific situation, you should always seek professional advice before taking any action. For free market reports on your suburbs of interest and other helpful resources to grow your wealth, make sure you join my property investor update at investorsedge.com.au/join. And finally, make sure you're a member of our Perth Property Investment Facebook group to be part of the conversation with other like-minded investors, get help to your questions, and get a feel for what's going on out there in the market. I'll see you in the group.